Tata Technologies launched its IPO on November 22nd, 2023. Now, this was a big deal because it was the first time a Tata company went public in almost 20 years, and many people were excited about it. When Tata Technologies shares were listed, they opened at Rs 1,200, which was 140% higher than the issue price of Rs 500. Now, this was a great start, but since then the stock has dropped by about 19% and is now trading below Rs 1,000. Now, we'll look into why this happened shortly. On the other hand, KPIT Technologies has been performing incredibly well since its IPO in 2019. The stock has increased by almost 1,600%, making a lot of money for investors. So what's fueling the outperformance of these two companies? How do they compare against each other? Now let's break it down in this episode of Informed Investor. Let's begin. You're watching Informed Investor, initiated by Equentis. Have you noticed how much smarter cars have become in recent years? They can now navigate themselves along the road, adjust speeds based on traffic conditions, and even park themselves. But how exactly are these innovations coming to life? Now, the answer lies in the remarkable growth and development of companies like Tata Technologies and KPIT Technologies. Both these companies are leading the charge in transforming the automotive landscape. Now let's talk about why they're growing so fast and how they're contributing to the technological marvels we see in modern vehicles. Now, Tata Technologies is at the forefront of engineering, design and services, providing advanced solutions that help car manufacturers develop smarter, safer and more efficient vehicles. It is also engineering the next generation of connected autonomous and electric vehicles. Now, to understand what this business actually does, let me break down the business model with example. So, Tata Technologies was hired by Tata Motors to convert their existing internal combustion engine vehicles into electric vehicles. Now, this project involved designing, packaging and integrating various components such as the battery, motor, charging socket and electronics into the base car. The project was successfully completed in 18 months, and the converted vehicles Tata Tiger EV and Tata Tiago EV have been launched in the market. Now, these vehicles have enabled Tata Motors to establish a strong foothold in the current EV market in India. Now, while this is an example of the auto industry, the company is also present in the aerospace industry. For example, Tata Technologies partnered with a global company to convert a passenger airplane into freighter so it can carry cargo instead of passengers. This was done to extend the economic life of passenger aircraft. Now, coming to KPIT. KPIT Technologies focuses on the automotive sector too, but they specialize in software solutions for electric and autonomous vehicles. Now, it is a company that works with car manufacturers to make cars more advanced. For example, it provides software services such as autonomous driving, advanced driver assistance, e-cockpit and connectivity, and probably everything that can provide more autonomous and risk-free mobility. In simpler terms, KPIT Tech helps car makers build better, more modern vehicles by providing high-tech solutions and services. Now let's understand the massive market both these companies operate in. Now, both the companies operate in an industry called ER&D. As you can see, the ER&D services can be broken down into software, embedded and mechanical engineering services and subdivided into many other services. Globally, the ER&D spend accounted for 1.8 trillion in year 2022, driven by spending on new age technologies. Now, going forward, the ER&D spend is expected to grow to approximately $2.67 trillion by 2026 and is expected to grow at a CAGR of 10%. But how is it across different sectors and industry verticals? The manufacturing sector, led by verticals of automotive, industrial and defense, have been the largest contributors to the ER&D spend, accounting for almost 48% of the total spend. Next was tech, which involves verticals of software, consumer electronics and semiconductors, accounting for 40%. In fact, software and internet is the largest ER&D vertical, accounting for approximately 20% of global ER&D spend and is among the fastest growing verticals. Lastly is the services-led verticals including BFSI, retail and healthcare, accounting for about 12% of the total ER&D spend. Now, India is also making big strides in this industry. India has emerged as a favorable destination for outsourced ER&D spend by global enterprises due to its large talent pool, affordable costs, etc. According to NASSCOM, India is expected to contribute 22% of the global ER&D market in the next few years, with software and automotive and semiconductors expected to contribute 60% of India's share of ER&D sourcing. Now, since both KPIT Tech and Tata Tech are more focused on automotive, let's focus on that for a bit. Now, the chart on your screen shows the list of ER&D activities for the automotive industry. These include areas such as digital manufacturing, powertrain development, manufacturing engineering, etc. Now, as the demand for autonomous and connected technology rises, the ER&D spend is only going to increase, playing a crucial role throughout the entire automotive value chain. Now, take a look at this chart to understand how different KPIT and Tata Tech are. Now, Tata Technologies is your go-to for manufacturing and network engineering. KPIT is for mechanical engineering, and both are present in embedded engineering and software product and engineering services. Now, let's look at some key parameters to see how these two companies stack up against each other. Now, Tata Technologies largely derives its revenues from three different industrial segments, which are automotive, aerospace, and industrial machinery, wherein the company has established relationships with top clients in each segment. It also primarily works with Tata Motors, Jaguar Land Rover, and other Tata Group companies. Now, KPIT Tech, on the other hand, is specialized in automotive and mobility. It only works in the transportation sector. Now, the specialization also allows KPIT Tech to focus specifically on transportation and drive growth in this area. Tata Technologies is also focused towards the automotive vertical, as the vertical accounts for 88% of their overall service revenues, while for KPIT Tech, about 99% of its business comes from the auto sector. In short, Tata Tech has a broad range of services with a strong focus on automotive, while KPIT specializes just in the transportation sector. Geographic concentration is another important factor in evaluating a company's risk and growth potential. Now, companies with a broad global presence may be less affected by economic changes in any single region. For Tata Technologies, their geographic diversification is notable. Their revenue sources are well distributed, with 20% coming from North America, 29% from Europe, 36% from India, and 15% from other regions. Now, this wide distribution helps reduce their dependency on any single market and can also act as a buffer against regional economic downturns. Now, in contrast, KPIT Technologies generates most of its revenues from Europe and North America. Therefore, any changes in economic policies or conditions in these regions have a more significant impact on KPIT's performance. Now, client concentration is another key factor to consider. It reflects how dependent a company is on a few large clients for its revenue. KPIT Technologies generates more than 80% of its revenues from its top 25 clients. This high client concentration means that losing a major client could significantly impact its revenue and profitability. While for Tata Tech also faces client concentration risk, its exposure is primarily with top 5 clients. If any of these key clients experience difficulties, it could affect Tata Tech's business performance. Now, in both cases, reliance on a few major clients can be a risk. Now, coming to financials, let's break down the revenue and net profit growth for these companies. First up, Tata Technologies. Over the last 5 years, they've grown at a compounded annual growth rate of 16%. Now, with KPIT, their revenue growth has been quite impressive, with CAGR of 23%. Now, this shows that KPIT Tech has been expanding its revenue at a faster pace compared to Tata Tech over the last 5 years. Now, for net profit, KPIT Tech reported Rs 5,011 crore, which is a significant 55% increase. Since fiscal year 20, their net profit has grown at an outstanding CAGR of 42%. On the other hand, Tata Technologies saw a 9% increase in net profit with a CAGR of 28% over the past 5 years. While this is a solid growth rate, it is not as rapid as KPIT's. Now, the reason behind the slow growth is tied to a significant event that happened last year. You see, one of Tata Technologies' key clients is an Indonesian automobile company called VinFast. Now, VinFast is actually one of Tata Tech's top 3 clients by revenue. Tata Tech played a crucial role in helping VinFast develop vehicles. However, they're now in the ramp down phase of the project. As a result, the revenue Tata Tech gets from VinFast fell by 13.8% year over year in the first half of fiscal year 24. Now, this drop in revenue has naturally impacted their overall profit growth. But there's some good news. The management has indicated that this transition period with VinFast is behind them, and they expect to resume sequential revenue growth starting from the second quarter of fiscal year 25. Now, return on capital employed is another financial metric used to measure a company's profitability and the efficiency with which it uses its capital. It shows us how well a company is using its capital to generate profits. In the case of KPIT Technologies, it has a ROCE of 43.96%, while Tata Tech has a ROCE of 30.6%. This means KPIT is generating a high return on each unit of capital it employs compared to Tata Tech. Now let's summarize the key points between KPIT and Tata Tech. Now, in terms of segment diversification, Tata Tech has the upper hand here, meaning they have a broad range of business segments. As we discussed, they're present in automotive, aerospace, and industrial, while KPIT is only present in the automotive space. Now, Tata Tech again takes the lead with a more diversified geographical presence in comparison to KPIT. Now, KPIT shines in revenue growth, showing they've been successful in increasing their sales. Now, KPIT takes the lead once more, demonstrating significant growth in their bottom line. Now, KPIT also excels in ROCE, showing they're effectively using their capital to generate more profit. Now, to conclude, Tata Tech and KPIT Tech are both significant contenders in the ER&D space. The segment is currently witnessing increased demand due to automotive OEMs choosing to outsource. Now, this puts both companies in a bright spot. Both companies have a large market to explore as India develops as an ER&D outsourcing market for the world. And that's exactly why both Tata Technologies and KPIT Technologies are experiencing such impressive growth. It's because they're deeply embedded in the evolution of automotive technology. Their contributions are driving key innovations that make today's car more smarter and more capable. Having said that, it's me, Merlin, signing off. Take care and stay invested.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.